Live on the fly, Mr. Babcock. Live
on,
on the fly.
on the fly.
Hey, let me ask you a question. How impressed are you with my ability to get this up and going in such a timely manner?
I mean, you never cease to impress me, man. It's like every time we're talking, there's just something else. Another in the plus column for Steve Paternak.
Yeah, like I bet you thought that I needed Zane for this, right? Zane, I
No,
love you. I love you dearly, Zane. I know you're gonna watch this, but I was able to get it up and going because I've been sick for the past 2 days,
oh, right.
and I forgot to get back to her. I saw the emails. I didn't see the emails.
I
Dude,
hope you're right.
48 hours. 48
Yeah.
hours. I literally, from Tuesday night at about 9 p.m., I slept until yesterday at about probably 7 p.m.
Wow. What you got? The COVID?
No, I do not. I did not have COVID. I did not test myself for COVID, but I don't think that I did.
I don't know.
I'm up and running. I'm good to go. 48 hours of sleep and some cough medicine, and here I am.
I don't know. That sounds a lot like COVID to me.
Good thing that we're virtual, huh?
That's right. That's right.
I was gonna come on with the mask just to be on the safe side.
That's a
Okay.
good idea. Make sure your door's closed over there at the Keller office. There, you're gonna infect the whole office there.
Yes, the door is closed. Door is closed. Yes, it is. I actually hold on one second. Let me just grab this real quick. So how you doing? Talk to me. What's going on? What's new in your world?
I'm good. I'm good. I mean, rates are new in my world. Rates are trending down. Keep those fingers crossed. It's looking like it's gonna continue. We're making slow gains daily. Which over the last 2 years has been like the complete opposite story. We were losing, 10, 15 basis points every day the last 2 years. Now we're making 10, 15
Yep.
basis points every day in gains. So, it's causing rates to go down very slowly, very, evenly. Kind of, it has me back to my old way of doing business, which was always to, float people's rates and not lock
Uh-huh.
in right away.
Yep.
And which is much better, especially in New York when we don't know where people are going to close, so we don't run up against expiration dates and all that stuff. So making a lot of very happy phone calls. People that started an application a month and a half ago that are now getting as much as 3/8 to 0.5% lower than where we started, and now I'm locking them in, and it's good. It's good. It's a
Those
good
are the
day.
best calls. Those are the best calls,
Best
right?
calls. Best calls.
Hey, by the
Absolutely.
way, Christian, I know I told you that your payment was going to be $5,000 a month, but guess what? It's only going to be $4,300.
That's right. That's right. No, it's a great day but the funny thing is, like I'll say, oh yeah, I'm getting you, whatever it is, an eighth, a quarter, or 3/8 lower, and I'm like, oh, it's like 40, 50, $100 less. I don't get as much as like awesome reaction as if I was the opposite way, telling somebody, oh, your rate's an eighth
Uh-huh.
higher, and it's
Uh-huh.
$20 more. They're like, oh my god.
Yeah,
You know?
yeah, yeah.
But listen, I'll take
Hey,
it.
listen, you got to make sure you have the uptick, right? Like, hey, Christian,
Yeah.
I got great news for you, man. Listen, remember we talked about your rate being, 7 and whatever? Well, I found, you got to get the uptick in the voice. You got to get back to
Yep,
that,
yep, yeah. No, you're 100% right. So you gotta.
Or hey, Christian, I got two options for you, right? We could stick with the old rate and you're going to pay X amount of dollars, or you can get this new rate.
Right. Yeah,
Which
that's a
would
good
you
one.
rather choose? Well, of course, I want the lower rate. All right. Well, guess what? It won't even cost you nothing.
Yeah. There you go. I'm gonna put you on the payroll.
Yeah, ABC, man, always be closing, bro.
That's right. But yeah, it's been a good couple of weeks, so hopefully we'll see, next week the Fed are going to make their official announcement. I think right now a 25 basis point cut is expected, and it's already kind of been priced in to what the markets are doing right now. There is some talk about the Fed cutting as much as 50 basis points.
So 50 basis points, just for layman's terms, is basically a half a point.
It's a 0.5% off the Fed funds rate. So it's not going to directly impact mortgage rates. And as I've been saying for the last multiple months that you and I have been doing this, is that when they cut, mortgage rates will already have been lower. And that's exactly what you're seeing right now, because over the course of the last couple of months.
In anticipation of that, they're lowering the mortgage backs.
Right, because mortgage rates go down or up in real time. So when inflation report comes out, we see mortgage rates react immediately. So what the Fed has been looking for is, kind of multiple reports coming out showing inflation cooling in order for them to cut the Fed funds rate. So because we're reacting in real time, mortgage rates are already been going down, and in anticipation, so the cut is kind of basically expected now that the inflation numbers and the jobs reports are coming into what the Fed was wanting to see.
Gotcha.
So, but again, some of the data, especially the jobs numbers that came in, a little worse than expected in August. That's where the kind of the talk about the Fed cutting maybe 50 basis points is coming in, because they don't, although, job loss is part of the equation on their cut, they don't want to see too much job loss, so they've still been playing a very delicate game of bringing inflation down to a normal level without causing a recession, and causing major job loss. So, this is what they talk about with like the soft landing, as opposed to a hard landing and causing a recession. Even a mild recession is not good for the markets and for jobs.
Yeah. So if I remember the last time we spoke, which was episode 20, by the way, this is episode 21. Yep. We were talking about that job report, and I believe the job report was a little bit higher than they expected, meaning that there was more people who were unemployed than they were expecting.
Right. More job loss in private sector. So that's what they are, keeping a very close eye on, because they don't want to, you don't want major job loss that will, end or recession. Yeah. So it's a very delicate balance what they're playing right now. So far, it's working. So we'll see. It's always a wait and see game. So, what I've been really recommending to my people is to lock, like if we have a floating rate, which means we started an application but haven't locked the rate yet, I'm saying I would wait for the cut, but possibly do it before the election. And that's not to say I'm expecting the election to go one way or the other, but it's a very contentious election. It's a presidential election. The markets tend to react one way or the other, however the results of that election come out. So to avoid volatility, lock in before that, but I got some people that, it's closer than you think. It's only a month and a half away, the election. Yeah. So some of the applications that I'm starting now, some people are saying, they might want to roll the dice to the election. That's their choice.
Well, I mean, listen, you start throwing words out like contention and volatility, people start like very, very PC of you, by the way. It is a very contentious.
This is live. This is going out. This is out there. This is live.
Yeah. I gotcha. Yeah. So you're right. There's just a lot of uncertainty right now. So some people are willing to roll the dice, right? And if you start going back to like your different types of personalities, especially if you're like die hard one way or the other, and you're like, there's no way we're losing, and I think that this is going to happen, and now you start playing the Fed chair, and you're wondering what's going on.
Right.
But
that's why, I always really prefer to spend the time to educate each one of my borrowers, let them know like what's causing market volatility, and let them choose, because I will get a fair amount of people saying, well, like what would you do? Or, I'll follow whatever you tell me. And that's a double-edged sword, because, and I tell them that, I was like, listen, it's a double-edged sword. It's a lose-lose for me. It's a lose-lose. I said, if I tell you to play it safe and lock, and then rates go down, you want to kill me. The only scenario that I win in that is if I lock and rates go up, but if rates go down and they're locked, they want me to get them a lower rate, which we can do, but we need a big market drop for that to happen. If I tell them not to lock and rates go up, then I'm really screwed, so it's, that's why, again, I prefer to spend the time to educate them, let them make the choice.
Yes.
And I still get a fair amount of people ask me the questions like, if it was your mortgage, if it was your kid's mortgage, what would you be telling them and stuff like that? And I'll give them my response to that.
I get the would you buy this property, or what do you think the value is here? So, playing that sort of advisor or acting in that sort of advisory role is super important for people in our position, because, I always err to the side of caution. Right. Like I'd rather, just like you, I'd rather say, conservatively, you're going to end, your payments could be this high, or not payments more so, but like your closing costs or your down payment closing costs could be this high. And then they're like, wow, that's high. I'm like, well, listen, again, please, I just want you to understand, I'd rather you come to me the day before and say, I was expecting X, but I got something that was 10% less than X, and be happy. And you don't got to pay me for that. Wonderful.
Right. And we are 100% aligned in that, because it's exactly what I tell people closing costs too. Like, I'd rather be conservative and it's a
Yep.
good day before you're closing versus, I have seen people purposely underestimate property tax escrows and stuff like that. And then, they're hiding under their desk when their client's calling them, wondering why the closing costs are $5,000 more than what they originally
Yep.
told them just to get the
Yep.
deal.
Yep.
So, but again, the education part is the key. You got to have the time to be able to spend the extra time, which is then, with, in my case, where I have a team of people that help me, because while I'm doing stuff like this, or while I'm on the phone with somebody for 20 minutes, educating them, I have my team actually doing the paperwork, writing the applications, the follow up, and all that stuff. So I have the time to do that.
Yep. It's so, and that, again, that's why you and I are so aligned, because like there's so many people in this business that are trying to, like, I'm reading this book called Fanatical Prospecting, and they talk about the law of necessity, and when you need something so bad that it's going to be harder to attain. So when you need that deal, when you need to have that client sign, when you need this, like the harder you need it, the harder it is to attain, and the harder it is for you to actually get it. And not that you and I don't need to get paid, but I think we're both aligned in the fact that our reputation and building these lifelong relationships with clients is a lot more important than making the immediate money right now. And that's because we're pretty much, we're committed at this point. Like, we're in the business, 20 something years. Like, this is our career.
Right. No, you're exactly right. They call that, when you're coming from a position of abundance versus like kind of desperation, where that's what you're describing. If you're a salesperson, it doesn't matter what kind of sales you're in. If you have, if you're hinging on getting that one deal, you're coming from a period of desperation. You're gonna make decisions, or you might be over promising or doing something just to get that deal done.
Yeah.
So no, you're 100% right. But so what we're doing now, which, because now, we're starting a lot of refinances. So, and the challenge there is that I'm saving people already when I'm starting their applications well over 1% or more from loans that we did just 2 years ago. So I'm looking at my database and seeing loans that we did in 2022 where they were locked in at 7.38, 7.5, some people close to 8%. And now we're seeing rates in the low sixes, and now we're even in the high fives in some cases, depending on the structure of the deal. They're already like well beyond the sweet spot, which is generally 1% or lower in New York for it to make sense to do a refinance in a short period of time. So we're starting those applications, but then I still get those people like, well, what if they go even lower? And I'm like, well, if it goes lower next year, do it again, but this is where we are now. And, this is what we said 2 years ago when rates went down 1% or more, it was going to be a good idea to refinance. So let's get those loans started. I mean, there's still a process, right? So we still got to do an appraisal. We still got to do title work. In New York, we're doing these SEMAs to avoid the New York State mortgage tax. So, a refinance in New York still takes time. So for the same reason I'm doing with purchases, I'm starting those applications, and I'm just not locking the rates in either on those right away. So if I can save them an extra eighth or of a quarter from where we are right now, it's going to be a good day.
Now, correct me if I'm wrong, but I saw a headline that rates are now at the lowest they've been in the past year. Is that accurate?
Even 2 years now. Yeah. They're getting there. Right. Yep.
So here we are, September 13th. I need to get glasses, but September 13th, 2024. So we haven't seen rates this low since 2 Septembers ago.
Yep. No, exactly. So
I swear, Christian, I want to go back to one of our episodes, and we said this. We said right around election time, this is going to happen, and be prepared for it.
Right. Yeah, right. And we are, and that's the thing. I have my people reaching out to our clients, rather than waiting for them to hear the headlines and call us, we're proactively calling them, doing the math with them, saying like, this is where we are. I promised you 2 years ago when rates dropped, I would reach out to you. I'm doing it, and seeing we can save. I mean, some people I'm saving $400, $500, $600 a month, on some of their deals already, and that could be even more if we get on, even like another eighth or a quarter. And what's nice too in this cycle is the people that we did loans for in 2022, some of those houses have appreciated $50,000 to $100,000. So I have some people that did 5, 10, 15% down and are paying PMI. Now when we're doing the new appraisals, their loans are under 80%. It's not only dropping the rate, it's dropping their PMI off too.
Yep. Yep. And
So
correct me if I'm wrong. PMI is ballpark. It's like about $200 to $300 a month, right? Or does it depend on the
depending on
property?
their credit and how much they put down, it could be as low as $50 a month to $350 a month. I mean, it could be
Yeah.
even higher than that if it's a big loan. So so that's, I mean, it's like a double hit because I'm
Yeah.
dropping your rate, your appraised value is higher, I'm dropping your PMI. So not only are you saving 350, 400 on the rate, you're dropping another $100 off because of the PMI drop off.
Yep. 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 And you guys, correct me if I'm wrong. You guys have the no cost refinances, right?
Yeah, we waive the lender fees, we credit the appraisal, so we do internal SEMAs, which is the mortgage tax loophole. We do those. So yeah, the closing costs are maybe a third of when they originally buy in New York if we do all that. So, and that gets added to the loan. So if you're paying off a loan of 400,000, we just add the closing cost to that, so they're not actually paying it out of pocket. So,
Yeah. Yep.
so,
Yep. Yep.
so
Just
no,
roll it all
makes
in. Roll
right.
it all in.
Anybody with a 7 number in front of their rate should be refinancing right now or looking at it and deciding to do it in the next month or so.
Yep. 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 So 1% is the number, right? Like, so if somebody's at
Generally.
so generally speaking, so today's rate is where are we at today? Like the average on a with
average 6 1/8, 5.99, like right, we're right pressing like that 6.
Anybody, like you said, at that 7 number, if you got a 7 in front of it, you should at least have the conversation.
Right. Exactly. We're right there.
I swear, like it's like you can lead a horse to water, right? And it's like, hey, like this is gonna happen. This is what usually happens. Let's just rephrase that. I say this is what usually happens around this time, every 4 years. There, just be ready to pull the trigger. And you and I are here, servicing the clients and offering them the advice. And then you get the clients. Some of them sit on the sidelines.
Right.
I had one client that told me that they wanted to wait to see after the election. So my immediate response was, well, let's, because it was, a lot of communication now is text messaging, right? So I'm like, hey, why don't we just jump on a call just so I could kind of walk you through what I'm seeing and kind of tell you what I'm seeing and what my advice would be in this situation if you're trusting me. And now with the new NAR rules, there's so much more transparency, especially when you're dealing with buyers, because now you have to have these exclusive or non-exclusive agreements with them. So it's like, so my immediate response was, hey, let's jump on a phone call. So they agreed, and we have a phone call set up for Monday. And, I'm just between conversations like this with you and other people that are in the industry, the buyers and sellers, like it just shows how important it is to make sure you're dealing with people that are kind of in the know.
Right. Well, and it's funny, and it's just nice to be watching what we've been saying for the last 2 years play out. Because what's become a terrible cliche now, the whole marry the house, date the rate cliche, which that theory is turning out to be exactly right. The people that were asking us 2 years ago, is it a good time to buy with rates this high? And we were saying yes, because when rates go down, regardless of what rates are doing, home prices are still going up because of the lack of inventory. So 2 years from now, saying in 2022, your house could be worth more. And the people that are on the fence are going to be paying more for the house. They might be waiting for a rate, but they're going to pay more for the house. Whereas you are going to own your house for the last 2 years. Your house will have appreciated, and you can always refinance. So that's exactly what we're doing right now. So
mind you, renters, it just keeps going up. It's never going down.
Yeah,
rent is never ever going down. Rents just keep going up.
We're doing appraisals on houses that we did 2 years ago that I'm serious. They appreciated over $100,000, in some cases even more than that, because of how much people have been bidding above asking prices and everything else. I have one that I'm doing that I closed 2 months ago that's already appreciated $50,000. So that's so now those people that bought 2 years ago with those high rates,
good for them,
that married the house and dated the rate are getting they're getting paid back right now.
All right, I'm going to switch gears a little bit, but not so much. So I got something in my inbox. I get something every single morning from the Wall Street Journal. And I'm just going to kind of read you sort of like the headline and kind of, this is all about what we've been talking about, right? So the headline, and I just kind of want your feedback on it, right? So the Fed faces a difficult decision: start small or begin big. Officials have signaled greater confidence that they can make multiple interest rate cuts over the next several months, meaning they're confronting questions on whether to cut the traditional 0.25 percentage or by a larger half point by the September 17th, 18th meeting. Last year, the Fed raised the benchmark rate to a 2-decade high of 5.3%, where it has remained. Traditionally, the central bank prefers a quarter point increments because smaller adjustments mean more time to study the effect of policy changes. But there are arguments to make a bigger cut too. Meanwhile, the European Central Bank lowered interest rates by a quarter point in its second cut in 3 months. So what do you think? Like, again, obviously you don't have a crystal ball, but like, do you think it's better to do one big cut or do you think it's better to go small?
I'm definitely no economist, but
let's preface this. We're no economists here, but I'm just just a couple guys just talking.
Honestly, I don't think a quarter, 25 basis point cut on a rate that's at that's at 8.5 right now, which is what we would be looking at. Like a home equity loan or something like that. I mean, a 0.25% is really not going to do much on credit cards that are 21.5% and car loans and everything else, but it is a sign. It's like a symbolic first cut to show like, okay, the plan is working. So we're going to make this first one, see what happens. And, then they would probably make one pretty soon after that. I don't even know that 50 basis points would make a huge impact on people's wallets, and rates on credit cards and stuff like that. So, it's really hard. It's really hard. I mean, I'm reading some other reports that are saying a 50 basis point cut could hurt the stock market. So, I mean, there's so many factors that they have to look at.
That was going to be my next question, right? Like what are the effects?
Safe. I think 25 plays it safe. So and if I've learned anything by watching the last 2 years, kind of how Powell has navigated, he definitely leans more conservative and likes to play it a little more safe.
Which I think, honestly, in hindsight, right? Like when you're going through something, it never feels like the right, like when you're going through that pain, it never really feels like the right thing to do. But then when you start seeing signs like this that are coming out where like, okay, now they're starting to cut and things are starting to look, on the bright side, like if they do a massive drop, in my opinion, I think that it would hurt more than it would help in the long run, right? Like, of course, it's going to help tremendously up front, but like, how's it going to be a year from now, right? Like, you never know the effects of it. Like you said, it could affect the stock market. It could affect so many different things.
Well, then the impact could be, if they make a huge cut like that, and you have people that, right now they've been raising rates to try to slow things down to get people to stop spending money. So now if you make a huge cut, it's like, all of a sudden, whether it's even logical or not, so people just think, emotionally, we're like, like, let's go spend money now. Like, let's go buy that car we didn't buy. Let's go do that, even though they're really not saving much. But, psychologically, you might get fence, sitters in all markets spending money again, which could, kind of reverse the course of inflation, which they've been trying to slow down. So, I don't know. Yeah, it's funny. I have a hard time sleeping at night just worrying about my clients' interest rates. I can't imagine how a guy like Jerome Powell sleeps at night. Like these guys, are making decisions that are affecting the world. It's incredible.
And then we take a lot of our the world economy, right? So when you're thinking about that, right, like we are such a major player, obviously, in the world economy, right? You start looking at these other central banks, right? This Central Bank of Europe, the Central Bank of China, and like how it all kind of, like, to me, now that I've been doing these episodes with you and really getting more in tune with it, I'm seeing that like a lot of these economies are kind of taking things or taking cues from other places and seeing what's working, what's not working, and kind of gelling it to make it happen here,
Yeah, we do have a world economy. It's not we're not isolated. We're not on an island anymore. I mean, it's we're completely interconnected, all of our economies. So it's why it's just such a delicate balancing act that no one will ever get right. I mean, you can read or listen to whatever news media you want to listen to, and you'll get 3 different opinions, from 3 different people, even on the same channel, whether or not they cut too, they raised too late, or they're cutting too early, or they're cutting, they should have cut sooner, they should have raised sooner. Like you're just never going to get people to agree, because there's so many different opinions. But also, again, they're looking at it from different lenses. Like, what does the impact? How does that a cut or a raise impact one market versus all markets? And some markets work inverse to the other, like the stock and bond market usually trade inverse to each other. So it's like, you might be helping one situation, but now you're hurting in another one.
Yeah. I would always say just make the most informed decision you could possibly make. Just be informed, right?
And
Like
look,
I think that's like,
regardless of everything that we're talking about, we're still talking about shelter. We're still talking about buying, a home that you're going to live in for the foreseeable future. And we've always talked about the you're in the market of the moment, whatever it is. When I bought my first place, I had no idea what was going on with mortgage rates. I was in my 20s. I was buying a $45,000 co-op. I went to my friend who worked at Bank of New York. It was before I even did mortgages, and I didn't even ask him what the rate was. I didn't even know. It was just, so
how much is it going to cost me per month?
Yeah,
exactly. I can do that.
Exactly. So it's because I think because there's so much information out now, especially because of social media, people tend to overthink the situation. And the situation is you want to buy a place you're going to live in. Could be something that you're going to sell in a few years, make money, buy something else. Could be a house that you're going to raise a family in and stay for the next 20, 25 years. And you have to be thinking in the moment. If you start getting your head, like looking at all these factors and worrying about, that you're going to be frozen in place and not want to make a decision. The decision is, you're making a move for your family or for your personal, wealth or whatever you want to do, whether it's investment property or whatever it is. You're in the market of the moment. This is what it is. And it always changes. I think we've shown that the last 22 years that I've been doing this. I mean, I've seen 10 different shifts completely. I mean, we've seen one of the worst recessions we'll probably see in our lifetime. We saw a market that was completely oversaturated with inventory. Now we're in a situation where there's no inventory, and just in the last decade, and everything in between. Changes in the mortgage market, changes in guidelines, changes in what, like you're talking about the NAR settlement. Like there's always something that throws things one way or the other, and we just have to shift with it.
Yeah. Because if not, you're going to be sitting on the sidelines.
Right.
Whether you're a consumer or you're a professional in the industry.
Right. Exactly.
And you're either buying or you're just sitting on the, like you're doing something, and the market is affecting you. And it's funny. Somebody told me one time, I don't remember where I heard this. Maybe it was, I don't even remember where I heard it, but they were like, somebody was saying like, oh, I don't really follow what's going on, as far as like, I don't follow what the laws are. I don't really follow what's going on because the politicians, they all, I don't trust them, whatever. And somebody said, well, wait a second. You stop at stoplights, right? You have to stop at a stop. That's a law. That's somebody decided that it was a law for you to do that. So like something that seems so trivial, but they're also making the grand decision. So you kind of have to be informed because it's going to affect you.
Right. Yeah, it's going to affect you. And that's why, more people are paying attention now because people are going to the supermarket and be like, oh, like how's my bill, $300, and we used to be $100 for the same stuff. And then that's when you get people starting to pay attention. And, when I do get those people that say they don't vote or they don't pay attention, it's like, then you really don't have a right to complain. I mean, you have to pay attention and you got to vote, whatever your conscience is, whatever your affiliations are, it doesn't matter to me. Vote your conscience, pay attention because this stuff does impact you, whether you know it or not.
Yep. And on that note, I think we've covered a lot today. And listen, every single time we jump on this call, it's always, it's talk that people just need to hear and they just need to be listening. And whether you're listening to us or you're listening to other people that are informed, my advice to everybody is just stay informed. And Christian, thank you very much for your time today. And looking forward to next Friday. Now that our summer break is over, we're getting back in the swing of things.
Back in business. Absolutely.
All right, man. Thank you very much for your time, bro.
Thank you.
All right.